Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Hartaj Singh. He is the biotech analyst and managing director over at Oppenheimer to discuss trends in the biotech space. Of course, January is National Biotechnology Month. Hartaj, it's great to have you with us. Welcome to Trade Talks.
Great, thank you. Thanks for having me, Jill.
You got it. And you would think with all of the themes around the pandemic and so forth, biotech would have performed a little bit better than it did in 2021. What are your thoughts around the underperformance here?
Jill, there's probably 2-3 reasons that people have pointed out to. I mean, there's probably many more reasons that we can get, very specific on, but I think there's 2 or 3 major reasons driving sort of the biotech underperformance in 2021. One is there's been this concerns around drug pricing legislation in Washington, D.C. That hasn't come through yet. It's part of the Build Back Better bill. But the effect of that on the industry is still yet unknown. I think if it does get passed, at least people can then start understanding what it does, to our outer year numbers, revenue numbers, and profit numbers. But it hasn't been passed yet. So that's been an overhang over the industry. Number 2, I think that, there's been this concern of a really huge sort of IPO and secondary window, a lot of, investment in the private side, those companies coming public in the last 12 to 24 months. And so that's taken a lot of dry powder off the table that would normally be supportive, of stocks when they're looking cheap, as biotech has been over the last few months. And then lastly, we're just COVID-19 has created this strange dichotomy where people really go into those stocks, whenever it looks like the virus is going to get worse or the pandemic seems to be getting worse. And then people rotate out of them when they think that the pandemic is going away and there's a reopening trade that's happening. And that volatility, combined with the other 2 factors that I listed, has sort of, added to biotech underperformance in 2021.
So do you expect more weakness for 2022?
I would expect so. I mean, honestly, on the institution side, just really haven't seen any excitement. Our internal clients also, there's not been a lot of excitement around biotech. If you look at biotech, you can separate it into the COVID-19 related companies versus the non-COVID-19 related companies. If you look at the COVID-19 related companies, whether it's vaccines or therapeutics, there's this concern that the variant is morphing so quickly that you need new vaccines, new therapeutics. So what does that mean, for revenues, for earnings, estimates, are kind of still, we're not certain with, for example, Moderna or Regeneron this year versus last year. And then I think if you look at biotech on the non-COVID-19 related companies, 80 to 90% of biotech companies are loss-making. And while biotech is really well-funded, has been better than a long time, 2 quarters from now, 4 quarters from now, 6 quarters from now, that will overhang start showing up again, right? When are these companies going to have to raise money? Biotech serially raises money all the time. So I think between these 2 concerns, I would expect some more underperformance for at least, a couple of months.
Right. It's just so interesting. We've heard about so many more technologies such as CRISPR, such as mRNA, and the different ways that it's being applied to COVID and cancer treatments and so forth. You would think that the investor base would get a little bit more excited since we're applying all these different technologies and therapies to different types of disease now. So fingers crossed, in terms of the treatment going forward. But at the end of the day, you had mentioned in your notes that a big chunk of biotech companies are based in the US. What's it going to take to get their revenues to uptick here?
Look, the biggest strength about biotech is also its biggest weakness, which is that unlike other very entrepreneurial sectors, 90% of our innovation comes from the United States. We're, what many people call an all-American sector. But our biggest difference is that we're heavily regulated. So think about it if, we were getting into a car to go to Boston, right? We'd know what the mile markers would look like. That's what regulation does. It tells you that Boston is whatever, 350 miles or however many. And, once you're 100 miles into the journey, you say, okay, we got 250 left, right? So clinical and regulatory milestones still have to be met. Unlike other industries where you can kind of disrupt innovation and get to market very quickly in an innovative way, you can't shortchange that in biotech, those clinical and regulatory milestones, which is what CRISPR, all these other, technologies have to go through. And that's what's causing, I think, sometimes frustration and impatience from investors.
All right. Well, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.